Mark from Atlanta is worried about having too much of his retirement savings tied up in just a few big stocks, which is why he asked, "Hey Hobart, I'm 60 and a lot of my retirement portfolio is concentrated in a few big tech stocks. Should I be worried about this? What's the best way to diversify?" Well, Mark, smart question, and you're right to be thinking about this. Having too much of your retirement savings in just a few stocks, especially in a single sector like tech, even if it's been really rewarding, can expose you to a significant risk. Here's what you need to know about over concentration and how to protect your retirement portfolio. So, why can it be risky? Well, first, volatility. When your portfolio is heavily concentrated in just a few stocks, especially in high growth sectors like tech, you're more exposed to volatility. Even though tech has performed really well in recent years, a major downturn or a regulatory change could have huge impacts on your savings. When you're near retirement, that could be unnecessary risk. Second thing to think about here is company-specific risk. If you've got a lot of money tied up in one or two companies, well, that means you're vulnerable to risks specific to those businesses. Think about corporate scandals, earnings misses, or leadership changes. Even top companies can experience unexpected challenges. There's also what we call sector risk. If all of your concentrated stocks are in one sector, like tech, you could get hit hard if that sector takes a downturn. You remember the dot-com bubble? Diversification across multiple sectors, that's what helps you protect from that kind of risk. It doesn't mean you can't have some great tech stocks in there, but let's talk a little bit about why diversify. First, it's that concept of spreading risk. Diversifying your portfolio across different stocks and sectors and asset classes like bonds and real estate and cash, that reduces your risk. This way, a poor performance in one area isn't going to sink your entire retirement plan. Second thing, steady returns. Diversification can also help smooth out the bumps in your returns. While you may not experience the same rapid gains from a diversified portfolio as you might from being concentrated in a hot sector, you'll also be less likely to suffer huge losses at the wrong time. Third thing, bond and cash allocations. Don't forget that bonds and even cash as a buffer can be important parts of diversification because these assets tend to be more stable and can provide you with liquidity when the market's down. So how do you diversify? Well, first you got to talk about rebalancing your portfolio. If your portfolio has become overly concentrated, and we're seeing that all the time right now, it might be time to rebalance. Look at your asset allocation and see where you can spread risk across different sectors like healthcare and consumer goods, energy, or utilities. Second, invest in index funds or ETFs. This is a kind of a simple way to diversify. An index fund or an exchange-traded fund ETF gives you exposure to a broad range of companies across different sectors, reducing single stock risk. Also, consider international exposure. Adding international stocks or funds can also help diversify you beyond just the U.S. market. While the U.S. market tends to be a good market, this can help mitigate risks specific to the U.S. economy or dollar-based assets. I also want you to consider alternative investments. Look into diversifying with alternative assets like you could look at real estate investment trusts or commodities to help hedge against inflation and add just another layer of protection. Here's my final thought. Mark, while concentration in a few big winners can be tempting and rewarding, especially in booming sectors like tech, it's important to protect your retirement savings from unnecessary risk. Diversification, it's your safety net. It provides you stability, and it helps ensure that one bad year or one bad stock isn't going to define your retirement. Mark, thanks again for asking such an important question. And for everyone watching, make sure you hit that like button and subscribe for more tips on securing your retirement. If you've got a question like Mark's, drop it in the comments and we might feature it in an upcoming video.